The European Union has a plan for your money, and while they say they won't seize your savings, the devil, as always, is in the details. You're about to find out how they intend to get their hands on a huge chunk of European savings, what it means for your financial future, and why they might just succeed in screwing over regular people. The European elites are on a mission. They need cash, a lot of it, to fund their big ideas. Things like green energy, digital projects, and even defense. We're talking about needing around 800 billion euros every single year to make their dreams come true. They've been trying to get this money for years with a plan called the Capital Markets Union, which was basically supposed to combine all European financial markets. But guess what? Most EU countries hated it because it would give bigger countries like France and Germany too much power, potentially crushing smaller economies. So when a big, complicated policy can't get support, what do these bureaucrats do? They slap a new label on it and try again. That's how we got the new Savings and Investment Union, or SIU. This new plan is a watered-down version of the old one, but it's focused directly on you, the regular person. Here's the deal. Top EU officials are upset that Europeans have over 10 trillion euros just sitting in bank accounts. Even worse for them, about 300 billion euros of new savings are flowing into foreign investments. From their perspective, that money should be going into European companies working on their big goals. And that's the main point of this SIU plan. They want to convince you to put your money into their vision. At first, they'll use sweet talk. But if that doesn't work, get ready for the tough stuff. You won't believe how they plan to get this money and what it means for your retirement. I'll explain it all. So, how exactly are they going to get your money if they're not just going to take it? Simple. Auto-enrollment in new pension schemes for all European workers. That's right, your money would automatically go into these pensions. And where do those pension funds invest? With big money managers who are aligned with the EU's agenda, sending your cash into green energy, digital technology, and defense companies. The SIU plan has four main parts. First, they want to push Europeans to invest in stocks instead of just letting cash sit in bank accounts or government bonds. Second, they want to funnel these savings into businesses that fit their specific agenda. Third, they want to combine European financial markets even further. And fourth, they want one set of rules and oversight for all European markets, taking control away from individual countries. This whole thing means the EU gets more power over Europe's finances. One of the first steps they're taking is to boost financial literacy, which basically means they want to educate Europeans to make the right decisions. And from the EU's perspective, the right decision is for you to dump your life savings into renewable energy, digital tech, weapons, and especially risky startups and big, hard-to-sell infrastructure projects. But wait, it gets even crazier. To educate you, they're talking about controlling what financial gurus on social media can say. They might even force these influencers to register and get their content pre-approved. And if that wasn't insane enough, the EU is also looking to work with financial influencers to spread their own propaganda. Imagine them telling you Bitcoin is bad for the environment, even though that myth has been debunked countless times. This is because the EU sees cryptocurrencies as a threat to their currency, the euro, which is already on shaky ground. That's why they're rushing to roll out their own central bank digital currency, or CBDC. What this means for you and how it could completely change the way you use money, I'll break down at the very end of this video. You need to watch it all. Here's the kicker about these risky investments. The EU wants you to put your life savings into these startup hidden projects. But a top EU official said that if you invest in shares of these things, you're going to get speculation and that Europeans should just buy and hold these volatile assets no matter what happens. When asked about safeguards for regular investors, if the market crashes due to, say, a war causing energy prices to spike, she basically said they won't be necessary because investors will know they should just buy and hold, not panic sell. It seems they forgot they're dealing with regular people who just want their money to be safe. They want your money that would otherwise be sitting safely in savings, but they expect you to be a super disciplined investor. Here's where it gets even more ridiculous. This same EU official admitted that they actually need to focus on financing big companies because small companies don't create enough economic growth. So they want you to put your money into risky startups, But they also want that money to go to big corporations because those are the ones that actually drive the economy. It makes zero sense. And to add insult to injury, she openly said that if retail investors get burned by this whole SIU plan, they can't come complaining to Brussels. It's like they can see a bubble forming and know it's going to pop, and they're already washing their hands of any responsibility before it even happens. This whole plan is probably going to fail, even if they implement it. Why? Because simply making investments available doesn't mean people will actually put their money into them. Remember, the EU needs about 800 billion euros in investment every year. Europeans are already sending about 300 billion euros annually into foreign assets. Even if all that money was suddenly redirected back into Europe, it still wouldn't be enough to meet the EU's minimum needs. They'll need to convince Europeans to part with even more of their savings. And that, my friends, requires a whole lot of what they call education, but what sounds a lot like intense indoctrination. The broader economy in Europe isn't exactly helping either. Strict rules mean you won't see many super successful tech companies pop up. A ton of renewable energy projects have gone bankrupt because the wind doesn't always blow and the sun doesn't always shine. And with Europe relying more and more on these unreliable energy sources, they're not going to become a major weapons manufacturer anytime soon. Throw in all the constant talk about a Russian invasion, and you've got people hunkering down and trying to save, not speculating on shaky startups. In our view, the only way they'll really convince Europeans to invest their savings against this backdrop is to force them to do it with a digital euro. This digital currency could have features like negative interest rates. Imagine checking your bank account and watching your balance slowly disappear in real time because the central bank is literally shrinking your money. That's a whole different ballgame than just losing purchasing power to inflation. So, what does this SIU plan actually mean for you? If you live in Europe, you'll probably get the opportunity, but not the obligation, to invest in more EU companies. But if you work in Europe, you are likely to be auto-enrolled into a new pension scheme. This means your hard-earned money will be automatically invested into companies that comply with the EU's agenda by default. So watch out. For the markets, this could create a situation similar to what we've seen in the US stock market, but on a smaller scale. In the US, most of the money flowing into stocks comes from pension funds and similar sources. This money automatically buys stocks regardless of the price, unless there's a major unexpected event that makes them sell. This is a big reason why US markets have generally gone up over the past decades. The EU has a similar system, but that money currently goes into all sorts of assets across many different markets. The EU wants to change this with the SIU, pushing that money into a select group of assets in a combined market. This could actually present some wild opportunities for smart investors. If you can figure out early on which assets the EU's new pension system will be directing these automatic flows of money to, especially the small and medium businesses that are most aligned with the EU's agenda, you could make a solid return on your investment over the long term. The bad news: this whole thing will probably lead to a massive waste of money as the EU uses this capital to double down on the same ideas that have been messing up its economy for years. The good news, if you play your cards right, you might be able to survive or even thrive in these managed markets. And here's the silver lining. This massive waste of money will inevitably lead to a serious financial or social crisis. That crisis might finally force the EU to move away from this increasingly crazy, almost Soviet-style system and get back to actual free markets. Of course, the EU will do everything it can to prevent such a crisis, and they'll likely use that digital euro to grab even more control during the next big European crisis. Stay informed. Your money and your future could depend on it. If you found this breakdown helpful, make sure to smash that like button right now. Subscribe to the channel so you don't miss out on more crucial insights like this. And don't forget to hit that notification bell so you're always in the loop when we drop new videos. Thanks for watching, and I will see you in the next one.